How to start investing in cryptocurrency with a small budget. Most people believe cryptocurrency is something you either fully commit to or completely avoid. There is rarely a middle ground, and this belief alone quietly stops millions of people from ever understanding how modern digital markets actually work. At first, that belief sounds reasonable. Crypto feels fast, it feels risky, it feels unfamiliar. But here's the part most people never question. Learning a system does not require believing in it, and it does not require large amounts of money. This video is not about making money. It is not about predictions. It is about something far more basic. It is about what actually happens when someone starts interacting with cryptocurrency using very small amounts, and why that experience feels so different from simply watching from the outside. And if you've ever looked at crypto prices and thought, I don't understand what I'm supposed to feel, stay with this, because that reaction is exactly where the real lesson begins. Over the last 10 years, cryptocurrency has slowly moved into everyday financial conversations. It shows up in news headlines, government discussions, and corporate reports. Yet for most people, it still feels distant and unclear. That confusion is not accidental. Most explanations focus on technology or profit, but they skip the part that actually helps people understand what crypto feels like to interact with. For people with small budgets, this matters even more. Because when you believe you cannot participate, you never gain exposure. And without exposure, markets always feel unpredictable and emotional. And here's something most people don't realize yet. Small exposure often teaches more than large exposure. Not because of money, but because of psychology. What? Starting small really means. In traditional finance, small budgets usually meant limited access. Many opportunities were locked behind high minimums or complex requirements. Cryptocurrency changed this quietly, by design. Digital assets can be divided into extremely small parts. This means someone does not need to buy a full coin. They can interact with a fraction, and that fraction behaves exactly the same way as the whole. That detail sounds small, but it changes everything. Because markets do not respond to the size of a person. They respond to actions. Buying is buying. Selling is selling. The system reacts the same way. So when someone starts with a small amount, they are not playing a different game. They are playing the same game, just with lower volume. This is where many people misunderstand small budgets. They assume small means irrelevant. In reality, small often means safer to learn. How people actually enter crypto. Most people begin through apps that look familiar. They resemble banking or payment apps. This is intentional. The complexity is hidden, so the experience feels simple. But behind each button press, many things happen at once. Prices update globally. Orders compete with each other. Systems decide which trades happen first. At the deepest level is the blockchain. Think of it as a public record. It does not care who you are. It does not care how much money you use. Every transaction is treated the same. This neutrality is important because it means small participation is not ignored. It is recorded, processed, and finalized just like any other. At this point, this might sound reassuring, but this is where most explanations stop too early, because understanding the system is only half the story. The other half explains why crypto feels emotionally intense, even with small amounts. In the next part, we'll look at something most people never expect. Why small amounts often feel more stressful than large ones. Why crypto feels different from stocks. And why this reaction has very little to do with crypto itself. Why small amounts feel big. At first, it seems logical to assume that smaller amounts of money should create smaller emotional reactions. After all, if less is at stake, the stress should be lower. But in practice, the opposite often happens. Small amounts frequently feel heavier, not lighter. This happens because small amounts are often tied to meaning, not comfort. They represent a first step, a test, a question someone is asking themselves. And when the market moves, it feels like the market is answering that question directly. A small loss does not feel like a loss of money. It feels like a mistake. A small gain does not feel like income. It feels like confirmation. This is why emotions are strongest at the beginning, not at the end. A small loss does not feel like a loss of money. It feels like a mistake. A small gain does not feel like income. It feels like confirmation. This is why emotions are strongest at the beginning, not at the end. This is one of the hidden advantages of starting small. Emotional reactions appear early when the consequences are limited. The market reveals how someone reacts to uncertainty long before the stakes become serious. Why crypto feels different from stocks. Many people ask the same question. Why does crypto feel more intense than traditional markets? The answer is not just volatility, it is timing. Traditional markets pause. They open. They close. Time creates emotional distance. Cryptocurrency does not stop. Prices move at night, on weekends, during holidays. This constant motion removes the feeling of separation. This is why even small budgets feel intense in crypto. The system never gives the brain a break. The lesson here is not about crypto. It is about how humans respond to continuous information. Once you understand this, crypto starts to feel less mysterious. It becomes a clear example of what happens when markets and attention never sleep. How this connects to the U.S. economy. In the United States, financial access has always expanded faster than financial understanding. Credit cards, online trading, and mobile banking all followed this pattern. Crypto is not an exception. Small-budget crypto participation reflects curiosity more than speculation. People test systems before trusting them. They explore before committing. This behavior shapes how markets grow and how regulation responds. From an economic perspective, this matters because understanding spreads before capital. Knowledge moves first. Money follows later. This has been true throughout financial history. This is why small participation is not noise. It is early signal. It shows how people adapt to new systems before those systems fully stabilize. The biggest misunderstanding about small budgets. The biggest misunderstanding is believing that small participation is pointless. In reality, it is incomplete, not useless. It is the beginning of understanding, not the end of the journey. Markets do not reward size. They respond to behavior, patience, timing, reaction to uncertainty. These skills are learned through experience, not purchased with money. This is why starting small often creates better long-term understanding than starting big. Mistakes are quieter, lessons are clearer, and confidence builds slowly instead of suddenly. Long-term view. What small starts really do. Small budget participation does not predict outcomes. It builds familiarity, and familiarity changes how people respond to uncertainty. Cryptocurrency may evolve. It may integrate into existing systems, or it may change into something entirely different. But the learning process remains valuable regardless of the final outcome. Understanding systems early, even imperfectly, has always been how people adapt to financial change. The goal is not certainty. The goal is familiarity. Starting with a small budget is not about winning or losing. It is about watching how markets behave, how people react, how technology shapes decision-making. Cryptocurrency is not a shortcut. It is a mirror. It reflects how modern finance works in real time, sometimes uncomfortably, sometimes clearly. And small participation is often the safest way to look into that mirror. This video is for educational and informational purposes only. It does not provide financial or investment advice. Cryptocurrency involves risk, and viewers should conduct independent research and consult qualified professionals before making decisions.